of the day definitely has to be Kotak Mahindra Bank on the downside after the Reserve Bank has barred it from onboarding new customers through online and mobile banking channels, issuing fresh credit cards as well. The action comes after the central bank cited concerns over the lenders' compliance and risk management practices. We have Ritu Singh joining in now with the details. Ritu, stock down 10%. What more does it mean?
Well, it is a significant setback, which is why you're seeing that stock reaction today. Kotak Mahindra Bank being asked to stop onboarding new customers through online and mobile banking channels and also stop issuing fresh credit cards, both of which have been engines of growth. Now, in a strongly worded press release, RBI said the action was necessitated based on some significant concerns arising from the IT examination of the bank in the last 2 years and the continued failure on the part of the bank to address these concerns. The compliances, RBI said, submitted by the bank were found to be inadequate or incorrect, and despite high-level engagements with the bank on these concerns in the last 2 years, the outcomes, and I quote RBI, have been far from satisfactory. The restrictions, however, will be reviewed after an external audit and remediation of these deficiencies to the satisfaction of RBI. Now, if you know, this is very reminiscent of what happened in the case of HDFC Bank in 2020, where it took nearly 15 months for all of the restrictions to be completely lifted. Coincidentally, the action on both HDFC Bank and Kotak came after their long-time CEOs had left and new CEOs were barely a few months into the job. Now, brokerages see this as a setback for the bank. They see an impact on profitability if the embargo stays on for a long period. Macquarie notes that a good proportion of Kotak's assets and liability products are being sourced digitally. For instance, 72% of savings accounts being opened by Kotak's 811, and so the business growth could be affected. It highlights Kotak has only opened 350 branches in the last 4 years, and that could be an issue going forward. Nomura says it is going to watch out for any step up in technology spending by the bank and adds that the impact on business and profitability could be limited, but there will be a reputational impact. Citi says RBI's action will adversely impact NIM and fee income. CLSA believes the profit impact will likely be modest unless the ban stays on for too long. And Jeffrey says that if the resolution takes more than 6 months, there will be an adverse effect we'll see on revenues and costs. The target price in the stocks, they range from about 1860 from Macquarie to 2100 rupees per share from CLSA.
Okay, all right. Thanks a lot for that, Ritu, for joining in, giving us that quick update. Well,